Hey, welcome to the Mortgage Minute. Lots happening around the globe in terms of interest rates. We're going to blow some myths and misconceptions on interest rates out of the water, but it's really important. If you're in a variable rate mortgage, you need to pay attention to this Mortgage Minute today. A couple things. Bank of Canada announced today that they're likely to hold steady as the Fed plots a likely rate hike. Fed meaning the United States. Further on it says Carney, remember Mark Carney, our former Bank of Canada governor, who's now the Bank of Canada, the governor of the Bank of England. Carney seems content to sit on the sidelines and watch for fallout from the Fed's policy transition. So what's happening here is Janet Yellen, who runs the Fed in the States, which is their central bank, she's going to make an announcement here probably between now and December 16th, we're expecting. Watch for the jobs announcement coming out of the United States on Friday. That will indicate whether they're going to raise rates south of the border. Meanwhile, Stephen Pulitz, the Bank of Canada governor, last week decided to hold steady and says, we're not going to raise rates here in Canada. This is interesting. One of the comments was the pause, meaning they're going to take a break and not raise rates, the bank's third since the summer, was widely expected as the country continues to grapple with the economic hangover from the commodities price slump and weak global growth. Wow. So that's a strong indication that we're not going to see rates. Now, I want to ask you something. If the Bank of Canada came out tomorrow and increased interest rates by a full half a point, what do you think would happen? What do you think these headlines would say? Oh, I'll tell you what they'd say. They would be screaming bloody murder. There would be blood in the streets. People would be jumping up and down, screaming and yelling because the Bank of Canada went from keeping steady on interest rates with no increase, all of a sudden jumping by a full half a point. Well, guess what? That's just not going to happen. I've got articles here that are saying that the Bank of Canada is not going to move. If the price of oil, here's one, CMHC says if the price of oil were to sit at $35 a barrel for 5 years in a row, we'd see a 26% drop in Canadian house prices. Well, forget about the details of that story, and there's no such thing as a Canadian house price. But the point is, it's very unlikely the Bank of Canada is going to raise rates, but that doesn't mean rates haven't already risen by half a point. What's happened behind the scenes is that banks have eliminated the discount on the variable rate. Back in the summer, in August of this year, if you came to us to get a variable rate mortgage, the absolute best rate we could get in the market was prime minus 80. If prime was 2.7, that means your rate could be as low as 1.9%. Today, banks have slowly inched back, and now some banks are as little as prime minus 20. Well, if you go from prime minus 80 to prime minus 20, well, heck, prime minus 80 to prime minus 30, that's a 50 basis point differential. That means they basically have increased rates by a full 0.5%. And my question is, how come this isn't headline news? Well, it's not headline news, it's because it takes more than 2 sentences to explain it. Therefore, the media avoids it. It's a little confusing. It's a lot easier to wait to see what Stephen Pulitz is going to do when he makes a rate announcement rather than trying to explain that, wow, the discount off of prime went from prime minus 80 to prime minus 30, and that's a differential of 50 points, and most people don't understand what that means, but here's what it means to you. If you're sitting in a mortgage today, no change. Don't worry. Your rate hasn't gone up. But if you're getting a brand new mortgage or you've been waiting, sitting on the sidelines, rates have already jumped by 0.5 point. Also, the bond yields have impacted the long-term fixed rates, so that means those rates have gone up as well. So, interesting stuff to say the least. Meanwhile, in the markets, I've got a great video here by a partner of mine, Neil McIver, and his partner, Ethan Dang, put together a video on the 3 catalysts that are going to impact the markets coming up. Number 1, what happens with the stimulus from the European central banks. Number 2, the U.S. job announcements. And number 3, whether or not OPEC is going to cut back oil production and how that's going to impact the oil prices. So if you'd like a link to that video, let me know and we'll send that on to you. In the meantime, in the markets, Vancouver house prices, regardless of what's happened with interest rates, continues to boom. We're seeing continuation of record prices in Vancouver. And last but not least, this is really important. Make note, January 1st, the Liberals are planning, the new Liberal government is planning to cut back the maximum amount that you can invest in your TFSA, tax-free savings account. So if you are serious about maximizing your contribution to the TFSA, you got between now and the end of the year to do that. And on that note, remember, we talked about this before, we will be holding a webinar series in the new year talking about all the various options you have when it comes to investing. We're going to kick that off with a prelude to the future investment topics, etc. But on a week from today, December 15th, we're going to launch our first of our webinar series. So if you haven't already, send me an email and let me know whether you want to be included on that list to be part of our webinar series. We're going to teach you a lot about all the different investing options available out there, whether it's your TFSA, RSP, or non-real estate investment options. That's it. That's the Mortgage Minute today. We'll see you guys soon. Thanks. Bye for now.